Good morning, everybody. Welcome to the webinar entitled Introducing the Solopreneur. We are very excited today to have Eric Bonk from the Back of the House company presenting today. Before I introduce Eric, I would like to go over a few logistical items. We have muted everybody for the purposes of preserving audio quality. We have a great turnout today, so we want to make sure that everybody will be able to hear Eric as well. However, you can actually also ask any questions either in the questions bar or in the chat bar on GoToMeeting. And Eric will make a pause in his presentation to answer any questions that you may have. Also, just logistically speaking, we will be sending a follow-up email to everybody who registered with Eric's contact information once again, as well as the recorded version of this webinar. So you'll be able to watch it in the future as well if you missed something or would like to see it again. So let me introduce Eric. I can't do him justice because Eric has over 2 decades of business successes in the HR and staffing fields, from being CEO of a huge company focused on staffing to also being CEO of Back of the House. And he actually founded the Back of the House a few years ago, and it's still the only one-stop resource for turnkey business establishments, in addition to being an end-to-end backup support for solopreneurs. So, but as I mentioned, I believe Eric will definitely be able to tell the story even better than I can. And so if you have any questions, please ask, and we're very happy to have Eric on board, and I'll hand it over to you, Eric.
Thank you very much, Maciej. It's great to be here, and it's great to be able to collaborate with Ivy Exec, which is a very high-class, very successful intermediary in the high-end job world. We are going to try and do the presentation part in about 30 minutes or so, 25 to 30 minutes. As Maciej already said, we'll pause halfway to see if there are any urgent questions. At the end of the presentation, we will use the remainder of the hour up to noon to answer any questions that you may have. If after that there are still any questions that are unanswered, please feel free to either contact Ivy Exec or us at backofthehouse.com. and we will certainly make every effort to answer any and all questions. Also, at the end of the presentation, we will have a very attractive offer for you. With that, let's go into the presentation, and if I can get to the second slide. Yes, I'm so sorry. It took a moment. As already outlined in the invitation, we will discuss and review here briefly what it means to work as a company of one rather than as an employee. When you should consider becoming a solopreneur or a company of one, and what then the pros and cons are of operating as an individual business. We'll quickly review what the legal and tax implications are, and often asked about how it is easiest to access health and retirement benefits. This is a table of content. Here we show what we'll discuss in the next 20 minutes or so. I won't go through that point by point, but when you download the PowerPoint presentation later on, the PDF, you'll have a point of reference. The conventional job, what does that consist of? Of course, there's an income component, a wage component. You get paid for what you agree to do at where you work. But that's not all. As part of the conventional work arrangement, the company usually provides a lot of support. It provides a payroll service. That means it withholds and pays taxes. There's quite a bit of administrative support. When you think about a payroll, it's really a bookkeeping piece, a private bookkeeping piece, where the payments made to you and made on your behalf to the government and other governmental institutions are tracked and shared with you. Then, of course, often as part of the job, there are all sorts of infrastructural facilities that are made available: phone, email, and other forms of support. And in the past, there used to be something called job security. I don't think many of us believe in that anymore, and we'll go into that further into the presentation. But there is an element of security, perhaps here and there, still left. What is often asked is to what extent dependency in all the support that I've just described, access to health benefits, the fact that taxes are paid on your behalf, etc., is often used by companies as a base for loyalty or dependency, as you may want to call it. The conventional job, what kind of platforms do we know? Of course, there is the conventional employment agreement. Next to that, one can work as an independent contractor. And as an independent contractor, there are really three ways to engage with an employer or with a company: as a 1099, as employed by a third party employer, often also referred to as a pseudo-employer, or being self-incorporated. Now, what does it mean? Let's take a look at each of those. Conventional employment. Of course, you exchange competencies, what you know or what you represent, to an employer in return for, number one, wages, but in return also for an enormous amount of support that I just referred to. And really, when you think about it, it's in that relationship, it's the company who owns all work-life support, like health, retirement, liability coverage, etc., your payroll administration. And the two component remuneration that is part of the conventional job consists of money and support. When you work as a contractor or through a staffing service or as the government refers it to, a contingent worker, then the employer often just delegates the employment to a third party. There is a payrolling firm or an umbrella employer or a staffing company who officially becomes the employer of record. And although you work for a company, there is a second company who is the official employer and who pays you. Then, of course, the infamous 1099 arrangement, where you are completely independent and there is no structured relationship between you and the company. You just agree to do a certain amount of work for which you invoice the company for your time or for a certain deliverable. The 1099 number that is referred to is a tax filing that both the company as well as you have to do. And it's basically a notification to the IRS that there has been a work relationship and that money has been exchanged in a work relationship without any taxes being paid or withheld. And that's an environment that's not really desirable because the IRS, of course, is often checking whether both the employer as well as the individual are really meeting all obligations that result from a work relationship. And then there is what we referred to before, the company of one, self-incorporation. Now you are a company and you have your company contract for work. And that is, of course, a service that we support, that we enable for people, but it's basically the third way of contracting for work adjacent to employment. What does the world of work look like? We roll the movie back 30 years to 1980. The workforce consisted of 110 million people, and roughly 15% of the 110 million people, and I'll hover over it with my mouse, worked independently or on a project basis in some way or form. A small percentage, about 1%, through traditional staffing services, 7% through contracting businesses like IT firms or advertising firms, and another 6% was worked as a true independent contractor. And the rest had what was referred to as the permanent job. And of course there was about 4% unemployment in those days. 82% of us had a job, and the average length of the job at that point was about 15 years. When you fast forward the movie to 2010, last year, you can see that not only the pie has grown and the workforce has developed from 110 to 150 million, unfortunately also the portion of it that is unemployed has grown from 4 to 10%, but most importantly, everyone that works on a project basis in some way or form, whether it be through a staffing service, through a contracting arrangement, or through a freelancing arrangement, about a third or so of us in 2010 worked on a project basis. What's even more significant is that the remaining 59% of us with the so-called permanent job, the job, now had an average job life expectancy of less than 4 years. So the job length declined from 15 to 4 years over that same period. So when you look at the whole world of work, it's enormously dynamic. There's nothing permanent anymore. 2/3 have a job life expectancy of less than 4 years, and about a third work on a project basis. Now that's an environment where really old or older employment conventions are not really the ideal way anymore, or constitute the ideal way anymore to connect people with work. On-demand working is rapidly becoming the new norm. Companies try to synchronize their revenues with expenses as much as possible, and are trying to veer away and stay away from long-term commitments through employment to people who are doing well or not. So there's an enormous desire there for flexibility and the ability to adapt expenses to income. On the other hand, of course, in a conventional employment relationship, you access all the company support that we just mentioned earlier, like health and retirement benefits and all the administrative support. And so if you change your job often or work on a project basis, it causes disruption in private lives to a great extent. People are on and off COBRA and see the tax integrity of their 401k compromised as a result of often changing projects or very short job lengths. It's really an environment where being your own employer is more logical. Provide yourself with your own support. Have it always with you. Have continuity in your life while you are free to either work on a project basis or on a regular job basis. Attach all the support to the individual and not to the place of work. Own it yourself. Be autonomous. Make sure that there's continuity in your life and in your support, and exercise control. And that's really where self-incorporation comes into the picture. Well, it means that you become a company, or you're contracting for work, or you're working through your own company and not as an individual. It really means that you are your own employee. You are employer and employee at the same time. And as your own employer, you can provide yourself with your own support, while you as the employee do the work somewhere on a contract basis or on a project basis. What is a significant difference is now that your company enters into a B2B relationship as a vendor of your services or your competencies to the company that deploys you, and there's no longer a work relationship between a big company and an individual, but a vendor relationship or a B2B relationship between a big company and a very small one, the company of one. Of course, it does provide you with autonomy and control, and that I've referred to before, because you have your own company providing you with your support instead of dipping into the support of the company where you happen to work. What are the advantages of that? Well, first and foremost, your own company is a liability shield between you and the big company. If there, for any reason, any liabilities arise out of the relationship that your company has with the big company, it's your company that is liable in first instance and not you. Compliance is an important factor that comes to play because, as you may know, working independently or working as a freelancer or on a project basis in some way or form is, again, as I mentioned before, often scrutinized by the IRS to really see whether this isn't a relationship that is there to mask or hide or walk away from tax obligations. So when you work on a project basis or as an independent contractor, making sure that that's really true and is really compliant with all the rules that independent contracting is surrounded by, provided by the IRS and other government entities, is really important. Of course, your company is the separator between your business finances and your own finances. It is a very clear, clean, transparent way to make sure that the two don't get mixed unnecessarily. And as I mentioned before, it is a B2B platform. It's no longer you as a worker or you as an employee, but it's your company as a B2B, business-to-business vendor of your competencies, a different relationship than an employment or work relationship. Of course, you can use your company as a backbone for your own health and retirement plans. Your company can contract for a health plan and a retirement plan with you as the beneficiary, and that provides continuity. It's constantly there. Whether you work at company A, company B, or company C doesn't make any difference anymore. The same thing applies to liability insurance, although legally the legal entity that you own is already a shield between you and the place of work. You can add a layer of insurance by having your company provide liability insurance to you. And of course, as I already mentioned, there's continuity in support. These are the advantages to the individual. Wow. What then will you ask, what are there any advantages for a company to deploy me as a company of one rather than hire me as an employee? And the answer is yes. Imagine that you are on a job interview and you can say, look, I am not Eric, but I am Eric LLC. I have my own company. And my own company provides me with all the support, protection, and accoutrements that I need, that otherwise you would have to provide to me as part of a work arrangement. I only need to negotiate with you what I need to do and how much you pay for that. Negotiate a statement of work and a rate. For the rest, I'm self-sufficient. So that saves the company who considers deploying you or your services a lot of money and reduces employment-related liabilities. And as I mentioned before, of course, compliance, making sure that you work within the guidelines and rules set by the IRS and other governmental entities. A professionally configured company fortifies your compliance. Again, it's a repetition, but your company is an entity that enters into a B2B relationship rather than employing you, which is advantageous for the company that deploys you services. And you, rather than creating a dependency, the big company deploys you as an autonomous and self-supported and protected entity. Very compelling set of advantages to the company. How do the costs compare? Are there any advantages to do this for either party? Well, employment, of course, an employer who employs someone or employs you will have to pay payroll taxes. They're just below 14% on average for 2011. On top of that, there's of course the overall cost of employment. Companies have an HR department. They use a payroll service like ADP. There are administrative costs. They pay you during vacation. There are other fringes. There are other facilities that are offered. As a rule of thumb, but these are only averages, the overhead associated with employment can often range from 20 to 30% or even more of payroll. Employing someone is very expensive. Of course, there are all sorts of liabilities that result from an employment relationship, and companies may or may not contribute to health and retirement benefits. The range is from 0 to 100% of premium, but lower percentages, 20, 30% or so, are most common, that companies will contribute to your health plans. In employment, there are often expenses associated with entry and exit. Companies use search firms and other ways to recruit people, provide sign-on bonuses, and then at the end of a job there is the negotiation. Okay, Johnny or Susie, the job ends. We didn't count on it, you didn't count on it, and now we have to sit down and negotiate a severance. As an independent contractor, what do things look like on the tax side? Well, there isn't a whole lot of relief, because if you work independently, you need to pay self-employment taxes in lieu of payroll taxes. If you work, it's the company who withholds and pays a payroll tax. If you work independently, you have to pay a self-employment tax in lieu of that. So there is no, for tax reasons, there is no real good reason to work independently, which is surrounded by all sorts of myths when often in the press and on TV we hear that companies resort to using independent contractors because it saves them paying taxes. Well, it doesn't really. When things are done properly, there is not difference. Do you have cost of personal support? Yes, you do. Now you can no longer rely on a company to provide you with payroll documents and pay your taxes for you, etc. You have to do it yourself. You need an accountant to help you figure it out, probably need legal help, IT support, etc. Of course, you need to provide your own liability coverage, health and retirement benefits, etc. Where the big cost savings are is, and I'm hovering with my mouse over it again, is in the cost of employment. If you can employ yourself in a less costly way than companies usually do, you can save the company an enormous amount of money by providing your own support, have no need for entry or exit expenses, and have lower cost of employment. This can only this often results in negotiations that say go like, hey, as an employee, you were going to pay me, let's say $100,000 to use a nice round number. On top of that, company, you were going to have a tax burden of about 14% in payroll taxes. There's another 20 to 30% in overhead, in employment-related overhead. Perhaps there was something that you were going to contribute to my retirement plan. If you, instead of paying me $100,000 and have another $40,000, $50,000 in expenses, if you pay me $130,000, I can pay my own expenses, I can be self-supported, and probably end up with net a little bit higher amount than I would be with you. In other words, both parties gain. And, you know, the 35 to 50% markup that you would ask as an independent contractor instead of an employee is a good benchmark, is what third-party employers like payrolling services and staffing services, etc., often ask for. They mark your payroll up by 35 to 50% in their bill to the company to pay for most of the costs that otherwise the company would be out of pocket. And so here is a handsome range in which one can negotiate and compensation for your own expense on one hand, and a share in the savings for the company. Forms of self-incorporation. Here you see an LLC, a limited liability company on the left-hand side, and a C Corp on the other. These are kind of extremes, but let this please serve as an indication of what the differences are. A limited liability company, an LLC, is really the ideal way to go for self-incorporation or being a company of one. In an LLC, your expenses and revenues, whatever you bill the company and whatever work-related expenses you have, are netted out in your LLC and are passed through into your personal tax return, into your 1040. And of course, you have to pay self-employment taxes in lieu of payroll taxes as an individual. Way at the other end, and often recommended by trusted advisors and accountants, are other forms of incorporation like S Corps and C Corps. Here on the page you see a C Corp. The big difference there is that the C Corp pays quarterly corporate taxes. Those have to be figured out and filed. In addition to that, a C Corp, you will have to become an employee of the C Corp, as a result of which the C Corp will have to have a payroll and pay payroll taxes. If then there's any money left, that can later on be distributed by the C Corp to you. You can see that this is already a much more complicated form that is really more suited for companies with more than one shareholder or more than one employee. If you want to contract for yourself and be a company of one, the LLC offers all the advantages that a C Corp offers, minus some of the administrative and tax burdens that are associated with a more complicated form of incorporation like that. Health and retirement plans. People often say, oh, but look, if I really need to be part of a large company plan because there are discounts there, and it's cheaper for a company to insure a pool of people than it is for an individual to buy individual insurance. That's a little bit of a myth. Insurance is almost never less expensive in bulk than it is for an individual. What company health plans really accomplish is that they average out demographics. They average out sex and age. A fact of life is that for a young, healthy person, health coverage and health maintenance is less expensive than for someone who is older and may start to show a few deficiencies here and there. And of course, when you have a large pool of employees, both are represented and costs are averaged out, but they are not lower because of volume. In other words, if you're young and healthy, you're probably overpaying. If you're older and less healthy, you probably have a benefit from being part of a pool. Doesn't take away that there is a robust market now today in individually underwritten health insurance, i.e. the ability to provide a policy for you or for you and your family. And there definitely are very attractive defined benefit plans. What is a defined benefit plan? A defined benefit plan is exactly what it says. You pay a premium and you get a defined benefit for that. It pays $500 for a hospital night. Whether the hospital charges $900 or $700, the $500 is the defined benefit. They're guaranteed underwritten. There is a plethora of products out there in the defined benefits world, and often for individuals to have a defined benefit plan in combination with a individually underwritten health plan, more catastrophic coverage, high-end coverage against low premium is the way to go. On top of that, there are health savings accounts. There are very handsome solo 401k products that allow you to deduct not only your own individual portion, but also your employer's portion, because you're your own employer, as a 401k contribution. Again, the markets out there in these products are growing rapidly and are getting very robust. Combining defined health and individually underwritten plan is something that is becoming rapidly more popular. Your back of the house, the number one stumbling block for people who work for themselves is not knowing what they don't know, not knowing the unknown. What does it mean for my taxes? How do I go about this? Where do I get health coverage? And so comprehensive oversight and overview and control is an absolute must. Key aspects are, of course, how do you bill? How do you collect? Make sure that your books are in order. What kind of banking needs do you have? What kind of IT infrastructure do you need? And again, as I mentioned, how do you get access to health, retirement, and liability protection? Of course, promotion, having a website, having resources like Ivy Exec are very important to make sure that your front of the house is covered too, that you have constantly access to new projects and new opportunities. And this is where we get to what we do, what back of the house does, the company both. We really serve as a one-stop shop, a resource where you can go, where you can accomplish what I just have mentioned in throughout the presentation. You can get incorporated, have a turnkey incorporation process, followed by a full set of services that unburden you from all the burdens of business ownership, that give you all the advantages of being a company of one without any of the burdens. Fully integrated operational support. We run your back office for you. We do your bookkeeping, we help you with your taxes, your financial reporting, we help you with your billing and collection, your bank account, provide you with a hosted IT portal, make sure that you can run your business anywhere in the world 24/7. And most importantly, have a personal advisor, a one point of contact where you can always go, single point of contact with all your questions, be it about health or your accounts, your bank, liability protection. It's your personal chief operating officer, if you will. And enabling an individual to become a company of one stop, back of the house. That's it. Conclusion, project-based work is the new norm. There is nothing permanent about work anymore. There are companies, big examples, like companies like IBM and Microsoft. Microsoft already has 50% of their workforce are contingent or work on a project basis. IBM strives to have 2/3 of their workforce to be project-based by 2014. There is no better time than prepare for this enormous dynamism than right now. And, you know, it just self-incorporation, establishing yourself as a company gives you two options. Every time you negotiate a job or a project, you can either do that as an employee or as a company of one. Even if you have that company of one, you can let that company go dormant for a little bit and probably reactivate it when you have a new assignment. And again, self-incorporation, the self-incorporated status can be advantageous in job search, as you can sit across the table from someone and say, hey, if you hire me, you have the option to hire me as an LLC, and all we need to negotiate is a statement of work and a reward. Anyone participating in this webinar is eligible for a special offer. If you would be interested in signing up for the back of the house services, it would come for the first month free. That's a $500 value if you sign up with our minimum contract of 6 months. And you also get an Ivy Exec All Access membership, the highest level of membership for 1 month as an extra bonus with that. With that, Maciej, I think we are ready to take questions.
Perfect, perfect. And I've been monitoring the questions and also the comments bar, and we definitely had some questions about, you know, what's the price for back of the house. I think you just mentioned $500 per month, but also as well. But one of the also we had comments about how great, excellent speaker you are. But some of the questions that came up that actually few attendees had pertained to the legal structures. So there's about 3 questions that 3 or 4 questions that actually just talk about the legal structures. So for example, can you explain to us, Eric, what is the difference between a C Corp and an S Corp?
Yes, thank you much. Just very high level. Um, the comparison in the presentation is I used the two extremes. The LLC is the simplest form of being a company, and a C Corp probably one of the more complicated. An S Corp is about halfway. An S Corp can be used by an individual, definitely, and is simpler than a C Corp in that it also, if it's used by an individual, can be used as a pass-through entity, but still is a more complex entity with a lot more obligations and filing needs than the LLC. If anyone has more detailed questions about that, we would encourage them to get in touch with us either by phone or by email, and we often serve as a resource for information for solopreneurs without any obligation. We will not try to sell you any services when you contact us. So if people want more detailed information about various forms of incorporation, we have documents that show comparative features of each form of incorporation, and we'd be happy to share those and send those.
Mm-hmm. That's great. Also, actually, you meant, so talking about the structures, somebody had a question about do LLCs have to pay quarterly estimated taxes, and or do you, as the principal, also have to pay quarterly taxes?
The individual has to pay, an LLC doesn't pay taxes. The individual pays quarterly estimated taxes. And the quarterly estimated self-employment taxes and federal taxes. And you know, that is that's really very simple. That's something that an accountant can simply help you with to set that up once. There is a ton of bookkeeping and accounting software available that can help you with calculating what those estimated taxes are. When it comes to taxes, we always recommend to have a tax expert or an accountant at least quarterly take a quick look and make sure that you're not making any mistakes, because of course Uncle IRS doesn't tolerate any mistakes, and sometimes not only holds you but also the place where you work liable for any deficiencies or any mistakes. Unfortunately, that happens a lot, and unfortunately in the press that gets blown up as intentional. In our experience, of course there are people who are intentional fraudulent, but most people are not, and most people are honest and realistic about their taxes, but they make mistakes. They don't know what they don't know. See an accountant, make sure, a tax advisor, make sure that you're doing the right thing.
Mm-hmm, mm-hmm. That's great. So actually also another attendee had a question about just, for example, the question is, if you set up a structure such as an LLC, but are asked to sign on a personal guarantee, such as for rent or things like that, the question is, does that shield disappear, and or are there any other forms of protection protection from any legal filings?
Yeah, that's a very good one. Of course, entities that deal with your LLC sometimes try to lift that veil and realize that it's been set up as to form a protective layer between contract parties, and ask for personal guarantees. Of course, as soon as you provide a personal guarantee, you have bypassed your own LLC's protection, and now you are personally liable again. So that, you know, that always is a little bit of a trick and a challenge to make sure that the party you are negotiating with, perhaps the landlord, accepts your LLC as a viable and credit-worthy and trustworthy entity. And you want to try and defend that as much as possible, because as soon as you start to sign personal guarantees, you have pierced the veil. You have given up some of the protective value that the LLC brings to you.
Mm-hmm. Mm-hmm. Actually, following up on the LLC, another question is, what is the average cost of a liability insurance policy for an LLC?
For people in office-related professions, there are fields, of course, where it's more expensive, like, for instance, the medical world. If you operate on people, etc., your personal liability insurance goes way up. But if you do IT work or office work or an engineer, etc., we see $1 to $2 million liability, professional liability coverage with premiums in the $500 per year range. You can buy very adequate coverage for approximately that sum, about $500 a year.
Okay, okay, that's great. One other question is also about incorporating, I guess. Why not just use a DBA and sole proprietorship? What are the real advantages of self-incorporation if the revenue is less than $250,000?
The advantages are, as were outlined in the deck, as a DBA, there is no protective layer. There is no official entity that one can contract with. You forego the opportunity to enter into a B2B relationship. You forego the opportunity to attach health and retirement plans to your legal entity. It is a DBA is an alias. It doesn't provide any of the structure that a legal entity like an LLC or an S Corp would provide. And because the question is also mentions an amount, the assumption often is that it becomes less costly or tax effective to incorporate once certain income levels have been achieved. Again, that's where an LLC and to a certain extent also an S Corp are very advantageous, because they are, from an IRS point of view, pass-through entities. They net out your billings with all your work-related expenses. Work-related expenses can include, for instance, your healthcare premiums that are not deductible from your income as an employee. But if your LLC provides a health plan to you and pays the premiums, those become tax-deductible expenses. So are you paying lower taxes as in lower amounts? No. Do you have more opportunity to net out income and business-related expenses? Yes. Therefore, a simple form of being a formal company, and the LLC is as simple as it gets, can be extremely advantageous.
Okay, perfect, perfect. Also, there's a few people had questions about just the workings of actually running the business. So one question is, for example, when beginning a new contract, if the person charges per hour of work, should the person include a line item to charge a percentage for indirect costs? And if so, what is the approximate amount of percent the person should use?
I'm very sorry, but I can't really follow that question.
Sure. So I think what the person was saying is that basically, if they hire a new person, should they, I guess, include a line item for indirect costs, like a percent of, I guess, of the payment? What percentage should go to indirect costs? I guess that the employee or new contractor might have.
I think the answer to that is yes, it should be included, but I have to admit that I'm not completely sure because I still don't completely get the question, and I would encourage the person who is asking the question to send it to us or to call or send an email, and we'll get to the bottom of it.
Okay, perfect. Also, another question was if you can further discuss in detail the difference between a 1099 independent contractor and a W-2 pseudo employee.
Sure. That's a very good question where the details are often either not understood or misinterpreted. It simply comes down to this. If you work somewhere as an individual at a company without any arrangement, without an employment contract, without the involvement of any third party, you just are there and the agreement is to, and I'm making this up as I go, to pay you $100 per hour for your services as long as you provide the services. That means that you provide work without the company paying any taxes or you paying any taxes. That means that you have to notify, it's not illegal, but you have to notify the IRS immediately, and that is called Form 1099. That is what Form 1099 is used for. And Form 1099 should be filed both by the company as well as by you. Company saying, hey, I'm employing Eric for $100 an hour and I'm paying the full $100 to him. I'm not withholding any taxes. There's no payroll tax, there's nothing. And Eric should file Form 1099 and say, I am receiving, Uncle IRS, $100 an hour from ABC Company, over which I will still need to pay all my taxes, including self-employment taxes, my federal taxes, my state taxes, etc. Notification. That is the 1099 relationship. It's a relationship without any base, without any platform, engagement platform. A W-2 is the other way around, is way at the other end of the spectrum. A W-2, Form W-2 is also an IRS form, is issued by a company to you and to the IRS when you are an employee. And it says, IRS, look, I have employed Eric for a month or for a quarter or for whatever period of time. I have agreed to pay Eric $100 an hour, comma, but I have withheld $30 an hour, and this is how I paid the $30 already to you in the form of payroll taxes. And the company provides a W-2 or a copy of the W-2 to me, so I can A, verify if the company is doing the right thing, and B, use that in my tax return once I file and pay my taxes to demonstrate to the IRS what already has been paid on my behalf by the company. And so 1099, no formal relationship, no taxes paid. W-2, formal relationship, all taxes paid.
Mm-hmm. That's great. I think a lot of people had questions about that one. Also, one question that has come up frequently as you were talking just now is one question that sums it up. how long does it take back of the house to set up an LLC, and how much are the both setup costs and ongoing support costs?
Very good question, thanks. Very simply, it takes us to fully establish a company, set up an LLC in the state of residence, and we do that in all 50 states, set up a set of books for the LLC, provide a hosted IT seat for the LLC, do everything turnkey, somewhere between 5 and 10 business days. It depends a little bit on how quick the Secretary of State office is and how long it takes to open a bank account, etc. But usually it takes between 5 and 10 business days, and you're completely in business from A to Z. The setup cost for that is $799. Our monthly fee is $499, all inclusive of all services, hosting the IT seat, hosting your website. Oh, by the way, including in the $799, we do set up and put together a website for your company. Do your bookkeeping, etc. Manage your bank account. Provide a personal advisor. Hey, your personal COO. Do your billing. Do your collections. Really make sure that in a spirit of being the antithesis of self-help, that everything is handled for you. It's $499 a month, $800 or $799 in a one-time setup fee.
Perfect, perfect. That's a great answer. So actually, maybe just one last question, so we can wrap it up. And some people actually had questions about combining the solopreneurship with international mobility. So how would you deal with aspects like immigration or different taxations, and also how does some of the things you talked about apply to international
perfect
entrepreneurs?
Perfect question. Perfect question. And we are seeing quite a bit of it. If a U.S. citizen has opportunities to contract abroad, doing that through a U.S.-based LLC is ideal. And what we can help with is figure out in what way and in what amounts any local taxes would be due. If you go and work in New Zealand on a contract basis, what the tax obligations would be there, in addition to the ongoing tax obligations of your LLC in the U.S. But actually, using a U.S.-based LLC by a U.S. citizen to work abroad is an absolutely ideal vehicle.
Perfect, perfect.
I think, and by the way, Maciej, the other way around, people who non-U.S. nationals who, of course, legally, with all the right permits, contract for work in the U.S., the same thing applies. If a company wants to deploy foreign nationals here in the U.S. on a contract basis, setting up a U.S. LLC for that purpose, for that individual or those individuals, is the same thing. Makes it as clear, as clean, as transparent, and as simple as it gets.
Perfect. Perfect. Well, I would like to thank everybody on behalf of Ivy Exec, and also like to thank Eric for providing such an insightful and great webinar, because these issues are very complicated. So just judging by the amount of questions that came across, we've hoped that we've been able to address these questions. But for any of the questions that we haven't been able to get to, in the follow-up email, as I mentioned, we will provide Eric's contact information, so you'll be able to contact back of the house directly. So any questions you have for Eric, and also about the PowerPoint, you can direct them there. As I mentioned, we'll also include a copy of the recorded webinar in the follow-up email we will be sending as well. So all of this was recorded for your convenience, so you'll be able to watch it again later. And I can see that Eric also put up a slide talking about a special promotion that all attendees are able to get. So on behalf of IB Exec and Back of the House, I would like to thank everybody for attending. And have a great day.
Thank you much, Abe. We'll talk to you soon. Thank you, everybody, for attending. Don't forget the offer, and please don't forget our offer to get in touch with either Ivy Exec or us with any questions you may have about this topic anytime. We are your source for solopreneurship. Thank you very much, everyone.
Thank you. Bye.